Good afternoon, ladies and gents. Welcome to another video brought to you by Total Control Traders. Now, some of you may have noticed there has not been as frequent of a video since this drop, and part of the reason for that is I realized that we were making a little bit too many videos that's beginning to drain on my mental capacity. So ever since this drop, the video has now sort of became or shifted towards the major event. And so this was one video that we made, the break of this big drop, and then the other video we made were somewhere around here for this big pop. And this time we're coming out with a video just to, for another potential of a big move that's coming up. And from the last video we discussed was we'll be looking for that daily higher low. And I'm thinking that the daily higher low may have been found over here on SPX over the market. And we'll go into a few reasons why I think that may be the case. Now, first of all, SPX is at the 0.5. It has held the 0.5. It is seeing this first 2-day green ever since the pullback started on March 30th. So that's over half a month ago. And so that's a good sign. Technically, today is the follow-through that the bulls wanted to see. But when I look over my board of tickers, there's a lot of good moves. For example, Amazon way over daily 8 already. But there are also other tickers that are only seeing that first day of green. More specifically, China tickers. So with that being said, tomorrow is going to be a key day to confirm whether if this is the higher low that was formed yesterday with this somewhat of a hammer reversal candle. Today follow through. Gonna need to see that tomorrow. Let's get into the actual reason why I think that the market higher low is likely found from here. Now we're looking at this upper trend line before, and the market wanted to give us a sign of full bull confidence. And when I'm looking at this full bull confidence is this 4-hour lower low that it had formed overnight last night, and that had formed a very strong bull divergence in the sense that the prices made new lows going to the GP, the GP that we've been watching ever since from back here, and while the RSI is making a higher low. So that is a strong bull divergence that, makes me think, okay, the chances of this being a higher low is likely in. But the thing that has me a little bit more cautious is yesterday's movement was extremely choppy. Look at this. Bull move, sold off. Dip being bought, sold off again, dip being bought hard. So I really like this candle with that huge lower wick towards the end of day. This shows me that the bulls are in control going forward. However, then coming into today, the pre-market, there was a big sell-off, and as soon as the market opened up, it was a strong bull day. The market is not making it easy for us, because now that we had a strong bull day today, look what happens in the after hours. This big red candle comes in, and majority of it is due to that Netflix earnings. For those of you that have not seen Netflix earnings, I believe so this is very significant on Netflix because it's the first time that they have lost net subscriber users. I believe it was something around like minus 2,000 versus the expected of positive 2 million. So that's a huge change. And then also the forecast for next quarter is something very similar, minus 2,000 instead of expected positive 2.5 million. So that's a huge precedent. It's never being witnessed on Netflix before. And after hours price action, last I checked, was down 25%, bringing it all the way down to, 1 second here. So bringing it all the way down to 258 was the last time I checked. That is a huge move. And considering it's all the way from 700, it has not seen actual daily trend changes yet. You look at this lower low, lower high, huge drop down, big gap, and then lower high again, another lower low, and as of this gap down on earnings is gonna be another lower low. So with that being said, market is definitely not making it easy for us on any bull moves. Tomorrow, we're gonna have to watch for that price action. There are a few other things on the market that I wanted to discuss for NASDAQ specifically. When I look at the charts, to be specific, the QQQ over DIA, which is the NASDAQ over Dow Jones, is bringing me to think that this is potentially the last leg for the tech. And it makes sense when we're thinking of, from the standpoint, what the 10-year over 2-year has inversed. The 10-year over 2-year bond yield has inversed. Look at this, 0.965 as of, 2 weeks ago? Just after the market pullback started. So this is very significant. If the market correction is coming, and which I do believe that it is coming, it's not right away, but it will be coming. If the market correction is coming, it makes sense that the cycle is near the end of it, where money is going to be shifting out of tech and more so towards safety, which will be a little bit more Dow Jones focused. So when I look at this, we are at the money line for QQQ over DIA, the tech over Dow Jones. We are at the money line again, and we are seeing weakness continuation. We are seeing right now, as of today, a bounce from the money line. So I'm thinking there's going to be one last leg, one last move up before tech dies down. But that may be escalated now with that Netflix earnings. So we're going to have to pay very close attention to the rest of the big tech earnings that are coming up. Amazon, Apple, Microsoft, Google, all of that. Google, I believe, is tomorrow. Yeah, Google earnings is tomorrow, so that should, or is it Tesla? No, sorry, that's Tesla I'm looking at. Google earnings is in a few days. So all these earnings should determine whether if this is going to be the end of the tech move on this cycle. And then the other thing I'm looking at also is DIA over SPY. So Dow Jones over SPY, SPX, whichever one you usually track. So when I look at this chart, let's look at the long term here. The weekly chart over here. So this has been a descending channel for quite some time, and we did break bear ever so slightly on that lower trend line of the channel. So depending on where you draw it from, let's see, maybe it works a little bit better if I were to draw it from here. Yeah, so if you were to draw it from here, you could find a bottom. Anyways, so with that, we are seeing a bull break from this shorter term, is still a long term upper trend line. Given that, also shows signs of strength for Dow Jones. So with that being said, one other thing I wanted to mention is, personally from my watch list, I have now made quite a few changes, mainly removing those growth names, keeping the tech names, of course. They are going to be major market movers, and then added quite a bit of Dow Jones names into the watch list. So if I were to show you guys, I've now made a list of Dow Jones actually. Let's move this over. So this is a Dow Jones list that has been newly added that I'll be watching going forward. All right, next thing on the agenda to discuss will be oil and gold. Now, oil is in a wedge. It had huge moves. It's been bullish since pandemic low. And you look at this, it was in the channel for quite some time until the bull break in February. Yeah, end of February, it saw a bull break. And then since then, it's, when you look at the weekly chart, this looks like a topping out kind of a chart to me. Huge bull break, unable to see follow through, big bear moves coming in, and now we're going sideways a little bit. And when I look at it on the daily, this daily, there is a wedge that's forming. Okay, depending on how you draw the lower trend line, you could probably draw it from here as well, something like that. It's gonna be roughly about the same area though. I like this lower trend line a lot more because there's been a few bounces, 1, 2, 3 bounces from this lower trend line already. So when I look at this, on a break of this, which I'm leaning towards bearish break, you know, breaking downwards, on the break of this, we should see some decent follow through moves. If we were to break bull, we could see a daily weekly bear divergence to form. So what's going to happen from here is a move, you know, on the bull break, move up to new highs before coming back down. Okay. The other way that this could happen is if we were to see a bear break on this, we should see a decent move downwards, back test, and another leg down. So on oil, there is going to be a big move coming up. Watch for that break, whether it's going to be bullish upwards or whether it's going to be bearish downwards. All right, next one is gold. The reason why I wanted to discuss gold is, sorry, that's BTC. The reason why I wanted to discuss gold is this was the projection that we're looking at before, and it was happening a lot quicker than this rough drawing over here. We're looking at just exactly what we discussed with oil, you know, a new highs into bearish divergence, and this is still happening. Okay, so this is still on the table even with a big bearish day today. This is still on the table, especially if market correction recession is coming. It makes sense for gold to see new highs. Nothing's changed. Slightly bearish from today, but that does not change the projection so far. Bitcoin is the next one. And Bitcoin, when I look at that monthly chart, when I look at that weekly chart, I'm thinking there's going to be a big bearish move coming to the downside, at least to the GP, which is going to bring us to around 2,600. So when we look at this, a huge bull move and then pull back, big bull move again, making that monthly bear divergence, pull back, and now we're seeing a monthly, weekly bear flag forming, unable to pop back over. Okay, that's very key. We're seeing unable to pop back over with this. Now I'm thinking that the next leg down is going to be coming very soon. We'll be looking at, you know, 1-to-1 extension target from back here or from back here will bring us down, lining up with GP right around 2,600. That will be the next target for Bitcoin. Bitcoin, big bears to come. All right. So that's it for the market topics that I wanted to discuss. Let's get into the requested tickers. This first, kind of interesting. First one I want to discuss is TZA, which is leveraged bears for Russ. So when I look at Russell, it is definitely one of the weakest, or definitely the weakest of the 4 indexes. Dow becoming the strongest, Nas becoming a little bit weaker, but Russell is the weakest of the 4 indexes. When we look at this, there was a sideways for a long time. This would have been, you know, a day trader's heaven, where, you know, it popped over, sold off, popped over to that zone again, sold off. I remember catching a few of these trades. It was amazing. It was easy peasy. With this bull break, unable to follow through. Huge movement to the downside, ABC correction to the downside, and now we're cooling off. We're doing the same thing again. We're doing zone to zone. See, so bottom of zone, pop, and then sell off. Bottom zone, pop. Didn't get to the top, sell off again. And with this, I'm thinking there's going to be more downside to come on Russell, especially if interest rates were to increase. That will impact the smaller companies, the growth companies, the ones that need loans, the ones that need money the most. So with that being said, you know, I can see this Russell. Let's fix up the chart here. It it did see some strength. Oh man, cannot talk today. It did see some strength over the last few days. And I can see this moving to that zone again before coming back down. But ultimately on the Russell, I do believe there's going to be more downside to come. The zone to watch for will be this zone. Once this is lost, we should see even further downside. When we look at it on the monthly standpoint, now this was a huge move to the upside. So far, we only consolidated to the 0.382. I can see this coming back down to ultimately to the 0.5, lining up with these previous resistances. So, which will make sense for a back test. So, but the thing is, you look at these lower wicks. That's why I say this key zone has to go first. So, if you're thinking of playing TZA, I will watch for that zone right around here, 2100. If we touch that, that'll be an amazing entry. Right, next one is gold and silver. So we just discussed gold. Silver is going to be very similar chart, I imagine. So this is gold chart. Potential curl back up. What is it? It's been a long time since I looked at silver. XAU, what's the other one? XA... Sorry, just looking through my list here. XAG. All right. Very similar chart, yeah. So the movement is going to be, generally silver is laggard of gold. So if you're looking at what's going to happen to silver, I would look to gold first. All right. Last but not least, XME, energy sector. It's going to be very similar to oil, I imagine, but actually looks a lot stronger than oil. Bear divergence, no follow through. Ooh, so the guide is still there. So there's definitely a lower trend line here. How do we draw this perfectly? Hey, that looks better. Yeah, so you use the real body on that first point versus the wick. Works out a lot better. You see 1, 2, 3. Probably make it a little bit closer. 3, 4, 5, 6 already. This will be the guide on energy. Wait, this is metals. Metals and mining, XME, okay. Metals and mining. So XME, this will be the line, this will be the guide that I'm watching for. Once this is lost, then you can start thinking of playing bearish. If you're thinking of playing bullish, there's no red flags for bull plays. Slow guide up. There is a rising wedge forming now though. When we look at this, there's a potential rising wedge forming. If it touches that, if you're looking for a bear play, first entry could be very nice entry on the third touch of that upper trend line. Right? So that's it for today's video. Hope you guys enjoy. If you know anyone that may benefit from the content we share, please consider sharing our channel with them. And I will be coming out with a video on that next big event. Keep an eye out for it. Thank you for watching. See you in the next video.